very happy evening to a very happy evening and a warm welcome to all of the attendees and panelists present here. As we all know, it's been our endless endeavor to never miss an opportunity to educate our clients on all that is related to investments. This webinar is one such. I'd like to give a little heads up to the first timers here. Mr. Sharan Patil is the founder and managing director of Inspire India Wealth Private Limited. He is a well-known face in the financial industry, especially in South India. He has won many awards and recognitions by NJ Group for leading his team to success for over a decade. His rich experience of over 15 years have helped many investors achieve their financial freedom. Simple yet highly effective approach is his USP to create wealth for investors. He founded Inspire India Wealth in 2007, and it is one of the leading private sectors in financial services. With a client base of 5,000 happy investors, it is a certified wealth management, mutual fund, and insurance consulting firm recognized by NSE as well as AMFI. The qualified and experienced team of financial experts offer thoroughly researched and customized financial solutions for individual investors. The exhaustive and up-to-date knowledge on mutual funds, tax laws, insurance, and various other financial investment avenues make it the most sought-after wealth management company in Bengaluru. So once again, welcome you all and hope you just enjoy this webinar and also gain a lot of knowledge regards to financial investments. Welcome again.
Thank you very much, Usha, for wonderful introduction. First of all, ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. I think after long gap, ನಿಮ್ನೆಲ್ಲ ಮೀಟ್ ಮಾಡುವಂತ ಒಂದು ವೆಬಿನಾರ್ ಮೂಲಕ ಮೀಟ್ ಮಾಡುವಂತ ಅವಕಾಶ ಸಿಕ್ಕಿದೆ. I'm sure you all, have a very much, healthy and happy life, right? So very important at this moment. We all gone through one more most difficult period was the third phase. But fortunately, third wave was not a very severe issue. So higagi, I think some people must be having, some cold and cough issue, but we are all now, I hope all are perfectly right, all right. Okay. Today's session, there are two things. I dividing into two parts. One is definitely you all know that there is a new fund. Today we have a special guest. Before that, recently we have, major event happened in the financial world is our union budget. Normally, Inspire India dalli ನಾವು ಬಜೆಟ್ ನ ಒಂದು ಬಹಳ ಸೀರಿಯಸ್ ಆಗಿ ತಗೊಳ್ಳಲ್ಲ. ರೀಸನ್ ಏನಂತಂದ್ರೆ ಮೋಸ್ಟ್ ಆಫ್ ಅವರ್ ಇನ್ವೆಸ್ಟರ್ಸ್ ಆರ್ ವಿ ಆರ್ ಹ್ಯಾವಿಂಗ್ ಅವರ್ ಲಾಂಗ್ ಟರ್ಮ್ ಮೈಂಡ್ ಸೆಟ್. So when we decided that, India's vision for 2030, India's vision for 2025 itself, we are very much clear that what the India is going to see the progress. But the whole, media world is always talking about budget, right? What all the decisions our government is taking, and every budget, according to me, is a one stepping stone. ಯಾಕಂದ್ರೆ ಎವ್ರಿ ಬಜೆಟ್ ಅಲ್ಲಿ ಮಾಡುವಂತ ಕೆಲವೊಂದು ಡಿಸಿಷನ್ಸ್ ಏನಿದೆ ಗವರ್ಮೆಂಟ್ದು, that are all taking towards our major change in the our growth, India's growth story. So ಅದೇ ತರ ಈ ಸರ್ತಿ 2022 also was a quite very impressive budget ಅಂತ ಹೇಳ್ಬೋದು. ನಾರ್ಮಲಿ ಎಲ್ಲಾ ಟೈಮಲ್ಲಿ ಬಜೆಟ್ಗಳು ಯಾವ ತರ ಇರುತ್ತೆ ಅಂದ್ರೆ ನಿಯರ್ ಬೈ ಎಲೆಕ್ಷನ್ ಬಂದ್ಬಿಟ್ಟಿರುತ್ತೆ ಯಾವುದೋ ಸ್ಟೇಟ್. ಅದು ಈ ಸರ್ತಿ ಅಂತೂ ಮೇಜರ್ ಆಗಿ ಬಿಗ್ಗೆಸ್ಟ್ ಸ್ಟೇಟ್ UP ಎಲೆಕ್ಷನ್ ಬರ್ತಾ ಇದೆ. ಅದೇ ತರ ಪಂಜಾಬ್ ಎಲೆಕ್ಷನ್ ಇದೆ. ಅದಾದ್ಮೇಲೆ ನೆಕ್ಸ್ಟ್ ಕರ್ನಾಟಕ ಎಲೆಕ್ಷನ್. ಸೊ ದೀಸ್ ಆರ್ ಲಾಟ್ ಆಫ್ events are going to happen, and it is very important for a ruling government to win the maximum seats so that that will decision maker for their next election also. But surprisingly this time, this government, instead of going for attracting the voters or popularity budget gintano, what they've done is they've given more of growth oriented budget, which is really a good decision anta helbodu. Normally popularity budget ಅಲ್ಲಿ ಏನಾಗುತ್ತೆ, they give lot of grants, discount, and lot of liquidity na create ಮಾಡಿ ಕೊಡುವಂತದ್ದು ಇರುತ್ತೆ. But first time I've seen that even though such a important decision ಗಳನ್ನ government ತಗೊಳ್ತಾ ಇದೆ ಇಂಥ ಸಿಚುವೇಶನ್ ಅಂದ್ರೆ ಇಟ್ಸ್ ರಿಯಲಿ ಅ ವೆರಿ ಗುಡ್. As I mentioned earlier, when you see the historically worldwide ನೋಡ್ತಾ ಹೋದ್ರೆ, whether it is, I'm not talking about any particular political party point of view ಅಂತ ಹೇಳ್ತಲ್ಲ, any ruling government, if they're ruling more than one term or two terms ಆದಾಗ ಆಟೋಮೆಟಿಕ್ಲಿ ದ ಕಂಟಿನ್ಯೂಯೇಷನ್ ಆಫ್ ಗ್ರೋತ್ ನಮಗೆ ಅಲ್ಲಿ ಕಾಣಿಸಕ್ಕೆ ಸಿಕ್ಕಕ್ಕೆ ಹೋಗ್ತಾ ಇದೆ. ಸೊ ಹಾಗೆ ಇಂಡಿಯಾದ ಸ್ಟೋರಿನೂ ಸ್ಟಾರ್ಟ್ ಆಗಿದೆ, ಬಿಕಾಸ್ ವಿ ಆಲ್ ಗಾನ್ ಥ್ರೂ ವೆರಿ ಟಫ್ ಟೈಮ್ಸ್, ಪೆಂಡಮಿಕ್ ಸಿಚುವೇಶನ್. ವಿ ಆಲ್ ಥಾಟ್ ಓಕೆ ಮೇ ಬಿ ಇನ್ 6 months ವಿಲ್ ಗೆಟ್ ಓವರ್. ಒಂದ್ಸರಿ ವ್ಯಾಕ್ಸಿನೇಷನ್ ಬಂದ ತಕ್ಷಣ ಎವ್ರಿಥಿಂಗ್ ವಿಲ್ ಬಿ ಆಲ್ ರೈಟ್. ಬಟ್ ಇವನ್ ದೋ the kind of government took an initiate for the vaccinating more than 140 crores people, and in that more than 85% people are having more than they both had a 2 dose of vaccine. But in other side anta tagondaga economically lot of challenges were there. But the government proactive ಆಗಿ ಹೇಗೆ ವರ್ಕ್ ಆಗಿದೆ ಅನ್ನೋದಕ್ಕೆ ಈ ರೀಸೆಂಟ್ ಆಗಿರುವಂತ ಕೆಲವೊಂದು ಎಕ್ಸಾಂಪಲ್ಸ್ ನೋಡಬಹುದು. ಒಂದು GDP ಗ್ರೋತ್ ಆಗಿರ್ಬೋದು, ಎರಡನೇದು ಇಫ್ ಯು ಸಿ ದಟ್ GST ಕಲೆಕ್ಷನ್ ಆಗಿರ್ಬೋದು, ಮೂರನೇದು ದ ಬೆಸ್ಟ್ ಪಾರ್ಟ್ ವಾಟ್ ವಿ ಆರ್ ಏಬಲ್ ಟು ಸಿ ದಟ್ ಇಸ್ ಎಕನಾಮಿ ಇಸ್ ಬ್ಯಾಕ್ ಟು ದ ಟ್ರ್ಯಾಕ್, ವೆದರ್ ಇಟ್ ಇಸ್ ಆಫ್ ಅಗ್ರಿಕಲ್ಚರ್ ಆಗಿರ್ಬೋದು ಅಥವಾ ರಿಯಲ್ ಎಸ್ಟೇಟ್ ಆಗಿರ್ಬೋದು. ದೀಸ್ ಆರ್ ದ ಸೆಕ್ಟರ್ಸ್ ಯು ಕ್ಯಾನ್ ಸಿ ದ ಲಾಟ್ ಆಫ್ ಬ್ಯಾಕ್ ಟು ದ ಟ್ರ್ಯಾಕ್ ತರ ಕಾಣಿಸ್ತಾ ಇದೆ. ಸೊ ಇನ್ ಸ್ಪೈಟ್ ಆಫ್ ಸಚ್ ಅ ಪೆಂಡೆಮಿಕ್ ಸಿಚುವೇಶನ್, ಕ್ರಿಟಿಕಲ್ ಸಿಚುವೇಶನ್, ವಿ ಆರ್ ಏಬಲ್ ಟು ಸಿ ಲಾಟ್ ಆಫ್ ಚೇಂಜಸ್ ಇನ್ ದ ಎಕನಾಮಿ ಆಲ್ಸೋ. ಸೊ ಹಾಗಾಗಿ ಈ ಒಂದು ಬೇಸ್ ಮೇಲೆ ಈ ಬಜೆಟ್ನ ಅವರು ತುಂಬಾ ಬ್ಯಾಲೆನ್ಸ್ ಆಗಿ ಮಾಡಿದ್ದಾರೆ ಅಂತ ಹೇಳಕ್ ಹೋಗ್ತಾ ಇದ್ದೀನಿ. ಸೊ ಫ್ಯೂ ಹೈಲೈಟ್ಸ್ ಅಂತ ಹೇಳ್ಬೇಕಾದ್ರೆ, ವಿ ಆಲ್ವೇಸ್ ವಾಂಟ್ ಟು ಸಿ ದಟ್ ಹೌ ದ ಬಜೆಟ್ಸ್ ಆರ್ ಚೇಂಜಿಂಗ್ ಇಯರ್ ಟು ಇಯರ್ ಅಂತ. ಸೊ ಈ ಸರ್ತೆ ಒಂದು ಬಜೆಟ್ ಅಲ್ಲಿ ಏನಪ್ಪಾ ಅಂತಂದ್ರೆ, ನಾವೇನಂತ ಕ್ಯಾಪಿಟಲ್ ಎಕ್ಸ್ಪೆಂಡಿಚರ್ ಅಂತ ಏನ್ ಕರಿತೀವಿ, ಬೇಸಿಕ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಇನ್ ದ ಇನ್ಫ್ರಾಸ್ಟ್ರಕ್ಚರ್. ಇನ್ಫ್ರಾಸ್ಟ್ರಕ್ಚರ್ ಅಂದ ತಕ್ಷಣ ಸುಮಾರು ಬರುತ್ತೆ. ರೈಲ್ವೆ ಬರುತ್ತೆ, ರೋಡ್ ಬರುತ್ತೆ, ದೆನ್ ಪೋರ್ಟ್ಸ್ಗಳು ಬರುತ್ತೆ, ಏರ್ಪೋರ್ಟ್ಗಳು ಬರುತ್ತೆ, ರೈಟ್. ಪವರ್ ಇದು ಆಲ್ಸೋ ಪಾರ್ಟ್ ಆಫ್ ದ ಇನ್ಫ್ರಾಸ್ಟ್ರಕ್ಚರ್ ಅಂತ ಹೇಳ್ಬೋದು. ಇವೆಲ್ಲಾನು ನಾವು ತಗೊಂಡಾಗ ದಿಸ್ ಟೈಮ್ ಗೌರ್ಮೆಂಟ್ ಇಸ್ ಗೋಯಿಂಗ್ ಟು ಸ್ಪೆಂಡ್ ನಿಯರ್ಲಿ 7.5 lakh crores, which is very huge. If you see that last year get tagondaga we spent nearly 5.5 lakh crores for the objective, but we are end up spending 6 lakh crores. But this year government itself is having that expectation. And the best part here, one example, government is planning to construct in 1 year nearly 25,000 kilometer highway, which is really commendable. ಇದರಿಂದ ಏನಾಗುತ್ತೆ ಅಂದ್ರೆ ಮಲ್ಟಿಪ್ಲೈಯರ್ ಎಫೆಕ್ಟ್ ಸಿಗ್ತಾ ಇದೆ. ಅಂದ್ರೆ ವೆನ್ ಯು ಸಿ ದಟ್ ಫಾರ್ ಎಕ್ಸಾಂಪಲ್ ವೆನ್ ಯು ಕ್ರಿಯೇಟಿಂಗ್ ಇನ್ಫ್ರಾಸ್ಟ್ರಕ್ಚರ್, ಯು ಕ್ಯಾನ್ ನಾಟ್ ಜಸ್ಟ್ ಸಿ ದಟ್ that's got always multiplier effect. Example, I'm just giving example, when there is a highway passed in a small town or village, normally the kind of money goes to the landowner. That will have a different impact on the many sector. Example, housing sector irbodu, car sector irbodu, other sectors. You can see that multiplier effect. So multiplier effect, suppose if government is spending 7 lakh crore antandre, you can see 4 to 5 times of multiplier effect in the economy. So it's a big boost. When you see the infrastructure growth, is a big boost for the economy to do that. So ಎರಡನೇದು ಬಹಳ ಇಂಪಾರ್ಟೆಂಟ್ ಏನಂತಂದ್ರೆ disinvestment. Government is also, last time also they were talking about disinvestment, but this year again, they are little bit, they are downgrading themselves into disinvestment. But major, most expected things ಏನಪ್ಪಾ ಅಂದ್ರೆ LIC IPO. You're all waiting for that. I think that is the one major thing is, government is going to get lot of, inflow for the, further growth and investment. Then one interesting thing I must tell all our investors that government talking about first time in virtual digital asset. Government has not mentioned anywhere. We're all talking about cryptocurrency, Bitcoin, all the different cryptos, but here government has not mentioned any specific names. But when they're talking about the virtual digital asset, means they consider it's a virtual asset, and they put directly straight away in the any virtual digital asset, government is put a 30% tax on that. At least now what is happening is, indirectly government is telling, okay, we have, if not today, tomorrow, if the bill is passed in the parliament, this is going to be there. So government is very clear that instead of they're coming out with their own digital currency. So government don't want the third party or private party to come and have the control of the on the complete company's economy. So they don't always want to have the control in the with the regulatory. So that is the one thing we can see the changes. So definitely this is a one important change in this budget anta helbodu. Then automatically government is also helping people to have housing for all. That is the one goal started in long back when government started got the first time ruling this Modi government. So they were talking about housing for all. That project they're continuing. So this time they're going to they are allocating almost nearly around 50,000 crores, which is they're having a target of around 80 lakh crores of house. So these are all indirectly going to help many sectors like cement irbodu, electrical agirbodu, steel agirbodu. These are the sectors we are going to see lot of changes. As a mutual fund advisor, what is the how we are to look into this budget, because there are so many things are there to talk. But as I told you, India is a consumption country. The story is going to continue. We have a great benefit of demographic benefit. Government is also focusing on the creating the jobs, and that jobs is ultimately helping economy to grow big. Then also one more segment, what I'm going to see is the rural economy, right? Government is really coming out with a lot of rural developments, right? So that is another very big change what I'm seeing in this budget, right? Government is allocating fund for that. So ultimately, overall, if you ask me, this is more about growth oriented budget than the popular budget. That is what the the outline of the budget anta helbodu. As an investor, again, you stay invested. As earlier you stay strongly, you continued that because of first time you see that budget, because of the budget, market is also responding quite positively. First time in the history you see that foreign institutional investors selling Indian equity and Indians are buying. Thanks to all the SIP investors, you are now becoming a true citizen of India anta helbodu, because first time you got the confidence on your own country. I think that's the really, really good change anta helbodu. So apart from that, as I told, next to look into India as for next 8 to 10 years of growth. That's very important. Instead of you looking year on year growth, look into 8 to 10 years point of view. I think what India is talking about, 5 trillion economy, 6 trillion economy, 10 trillion economy, definitely these days are going to happen. But most important is India is going to grow, but as an individual investor, our portfolio and our investment also should grow. That's very, very important. I think, as I told, the whole, the system is going to support, the ecosystem is working towards the growth. So these are my few points on my observation about the budget. If anybody interested, I have some notes on the budget I can probably share with people. I want to share from our Inspire India, so that, as a mutual fund investor, which are the sector you should look into future, to invest in this, so that will help to create a good returns in our investment, right? So today, apart from the budget, second part of today's session is, today we have a special speaker. We have seen one new fund has launched, DSP, Global Innovation Fund. It's very innovative fund according to me, because I've recently heard the presentation and I found it's very interesting. So anyway, we are having a lot of investment in India, but this is also an opportunity to get an exposure in especially world or global innovation. I think this is a wonderful fund as per my personal experience. So today we have a special speaker. She is South sales head of DSP. And she is going to talk about the special fund, and sure, after that, if you have any questions also, we can take it. So today's speaker is going to be Ashu Keshav. Welcome, Ashu.
Thank you, Mr. Sharan.
Yeah, so over to you.
Thank you. That was a very good synopsis on the budget. In fact, for anybody who didn't spend 2 hours on the budget, it was a very good snapshot of where to invest and what to do. Of course, India is a great place to invest in, and we are well invested in India. What is also important is you need to hold your investments to believe in the India growth story from $3 trillion to $5 trillion. There is a lot of opportunity to double your money from here as well. Of course, markets are at this point at a peak, but as long as your earnings are going up, as long as the companies are making profits, you will also continue to make your profits. Apart from India, there are a lot of things which are also happening in India which we don't have an opportunity to invest in. So if you realize that, a lot of services and products are changing quite a bit. Since we are from Bangalore, we know that how the startup world is also in a way, making a big impact on the India growth story. However, if we have to, benefit from the new kinds of products, the new kinds of services that are being offered, if we want to invest in this, these ideas are not really available in India. And so you have to look also, outside for more ideas which would benefit from the India growth story in a way indirectly. Now, thanks to COVID, we are all getting digital, and COVID has actually speeded or increased the speed of how digitization in India is going to happen. And it has also increased the speed of digitization across the world. There were different revolutions that have happened in the last 200-300 years, and every revolution that has happened has changed the way in which we do our work. It has changed the way in which we engage with each other. It has changed the way in which we communicate with each other. So the next revolution is also going to happen in that way. The next revolution is going to be in the digital space, and I will tell you how different revolutions have actually changed the way in which we have looked at doing business or engaging with each other or communicating with each other. Just allow me a moment to share my screen. If you can confirm that you can see my screen, I can start.
Yes, Ashu.
Are you able
Yes,
to
Ashu,
see?
please go ahead.
Sure. So what is this DSP Global Innovation Fund of Funds? It is a fund which gives you access to any kind of innovation and any kind of technology across the world. It gives you access to all the big dominating companies in the field of innovation and technology. It gives you access to all the companies which are disrupting today, and it gives you access to all the companies which are enabling technology or which are enabling digitization in the current world. Now, if you see, the globe or the global business is divided today into two parts. One part is your traditional businesses, which are like Sir just mentioned, that we have railways, we have airports, we have other ports, we do construction, so we use cement, we buy textiles, we also do our banking. So we go to HDFC Bank, ICICI Bank, SBI, so on and so forth. We drive our cars, so we buy automobiles. Then we use petrol, so we invest in oil and gas. Now, this is a very traditional global economy, and this will continue to exist, and we need to continue to invest in this. However, the next 100 years is also going to be a new age global economy. And how are we going to drive business over here? When we talk about cars, we are going to migrate to electric vehicles. When we talk about shopping, we have already in a small way migrated to e-commerce and online shopping, not just from our point of view of shopping on e-commerce sites, but even in terms of hosting your businesses. If you are a business owner, if you are an entrepreneur, you are now holding a virtual space to sell your products on the marketplace. Now, if you want to transact, you have moved away very slowly from hard cash or from going to your bank to a Google Pay and to another fintech platform like Paytms and Phone Pay and Bharat Pay and so on and so forth. If you are doing all this, then instead of just having a security guard sitting at your office, you also need cyber security. And so you have companies which are specializing in cyber security. Until now, most companies were holding huge files of records of their customers. Today everything is going digital, so everything is getting stored on the cloud. And so there are companies which are actually letting out real estate on the cloud, which means that your data is being stored. Now, just for example, you have, say, Google Photos. Now, when you say Google Photos, you are not storing your photos on your phone, on your hand phone. You are not holding it on the hard drive, but you are using it on a Google Photos app. Now, where is the Google Photos app sitting? It is sitting on a cloud. So Google is making a certain revenue out of it. When your limit gets exhausted to 15 MB, free limit is 15 MB. Beyond that, you have to start paying to Google, and Google is making money out of it. So like that, there are other companies. You may not go and enhance your limit, but there are other companies which need to store their data. Banks need to store their data on the cloud. So they will start buying, cloud space or cloud real estate, or they will start buying or renting out, cloud space. So there are companies which are profiting from this. So, all in all, what I am trying to say is there is a traditional world which you are already invested in according to your asset allocation. Now, there is also a new world which you need to start looking at. It does not mean that you have to dump the traditional world and completely move on to the new world. It means that you have to start adopting to the new world and start adding a little bit and start profiting from the profits of the new age companies. What DSP Global Innovation Fund of Fund attempts to do is to give you access to all these innovation companies which are listed and which are investable and making profits. We do have these companies in India, but 99% of these companies are not listed in India. They are only in the unlisted or the startup world, still in the venture capital world. But internationally, you have companies which are already listed, and so you can start investing. Where will this fund invest? We want to catch these companies very young. And so where will this fund invest? This fund will invest across three kinds of companies. Now, the first kind of companies are companies who have already proved themselves. Now, these are companies like Amazon and Apple and Tesla and Adobe and Netflix. They had listed 15 to 20 years ago. Most of us think that I wish I had invested in Infosys 30 years ago. I wish I had invested in Wipro 30 years ago, or I wish I could buy an Apple share 30 years ago. I would have been sitting on 1,300% returns, 1,300 times returns, sorry. But we did not do that. Does it mean that we are late? Possibly no. we need to invest in these companies which are still dominating the technology space, because these companies are continuing to grow. These companies are continuing to grow organically and inorganically, which means that they are buying out the smaller fish in the market and adding to their profits. Whichever company is making profit and is small and can be bought out by these companies are buying those companies. And the other thing is, they're continuing to grow their market share. They are continuing to innovate products and services. So if you take the case of Amazon, we all know Amazon as a marketplace, but we don't know that Amazon is having a higher amount of revenue from its web services. It's called Amazon Web Services. What does it mean? If you have to start your own website, you can actually rent out your domain name from Amazon, and Amazon provides you web services from there. Amazon is also getting into music. It is already in the streaming space. It is also getting into the fintech space in terms of Amazon Pay. So it is already innovating, and it is offering you more products and services, and it is making a higher wallet share in your wallet, and trying to get more subscription out of you, thereby increasing its profits. So companies like Apple, Amazon, Tesla, Adobe, so on and so forth, they are dominating the technology world, and they will continue to dominate. Hence, we are also looking at investing in these companies. The second pillar of investment are companies which are enabling technology. Now, which are these companies which are enabling technology? You must have heard about semiconductors. You must have heard about how semiconductors is making, inroads into every possible industry. You take any electronic gadget. Every electronic gadget is now powered in a smart way, and the way it becomes smart is by having a semiconductor in it. You take your refrigerator. 20-30 years ago, when you had a refrigerator, all the refrigerator did was it gave you ice, and it kept your food cool. Today, the refrigerator is so smart. What does it do? It gives you crushed ice, it gives you water, it has an in-house water dispenser, it has, rock ice. There are some, there is smart cooling technology. You can increase and reduce the temperature. There are some smart refrigerators which will also give you, it can make curds for you as well. Think about the washing machine. Earlier, the washing machine, you had to move it with your hand, right? Today, you don't have to do anything with the washing machine. You put in the clothes, you put in the powder, it gets washed at whatever temperature you want it to get washed, whichever quality of the cloth you have, and it also comes down, high and dry. So you don't have to dry those clothes. Going forward, you probably will have washing machines which will also probably iron your clothes and give it back to you. So all these are being powered by very smart chips in every electronic device. And these companies by itself are not using technology, but they are providing technology to various other manufacturers to make their products smart. Now, which are these companies? These are companies like NVIDIA or AMD or EPAM or Intuit or Trimble. These are the second layer of companies that we are going to invest in. The third layer of companies are young disruptors. Now, what are these young disruptors? These are, new age companies which are changing the way we are working and engaging with each other. So, like I spoke to you about communications, 20 years ago, we were talking on the phone. We were doing con calls on the phone. That was like a completely disruptive idea that we had. Today, we are sitting in front of each other on Zoom. 20 years later, when you and I sit and talk like this, it will actually look like I am sitting in your home having coffee with you and explaining a product to you. That's the kind of progress we are anticipating in communications. You must have heard about the meta world. Of course, in the last 2 3 days, Facebook stock has fallen quite a bit. So, there's a lot of worry and news around it. But come to think of engagement and communication, there will be a time where marriages will happen on a meta world. Any kind of concerts will happen on meta world. So if you are wanting to watch, a concert happening in Chennai, and you don't want to be in the crowd, and you really can't experience the concert in person over there, you can actually choose to be there in the virtual world, which means that you will experience that concert in the four walls of your house. That's the kind of progress we are looking at in communications. Again, take the case of an idea called genome editing. Today, we all wish that we had some amruta so that we become immortal. We have all heard about Bhishma Pitama and his immortality and his choice to die when he wanted to give up his this world. This is going to be true in the next 20 30 years. How? Today we have reached a certain progress in terms of gene editing, which means that if our parents had say cancer, or they had TB, we can actually go and get a test done which will tell us if we are prone to the same disease. There could be a gene which is carried forward from our parents to us, and you can then separate out this gene and you can isolate it and kill the gene, which means that uh, if your parents had that disease, you will not be at the risk of that disease because you have isolated that gene which causes that disease and kill it, which means that the only way a person can die is by accident. He will not die, because of any kind of illness, which can be hereditary in nature. So we are investing in companies which are in a way researching genome editing and are making huge progress in that space. Likewise, earlier we used to go out and have food, but today we are ordering more and more at home. Swiggy and Zomato are great examples of how they have invaded our kitchens. And if you are women, you know how convenient it is, and if you are men, you know how much your wives and your children are spending on Swiggy and Zomato to get food home. Of course, Zomato has just got listed, but there is a company called DoorDash in US, which is already listed for the last 8 9 years and is already making profits. So this is a young disruptive idea. And likewise, you have gaming, you have virtual data warehouse, which I spoke to you about. We all know about fintech, and there's much more to happen in all these spaces. So these are the young disruptive ideas, and these are the young disruptors in whom we are going to be investing. So to summarize this, sheet, we will invest in companies which are already dominating in the technology world. We are going to invest in companies which are providing the infrastructure to enable technology in various industries. And three, we are going to be investing in young disruptive ideas which are changing the way we are working and playing and communicating and living our lives. So these are the three ideas where we are going to invest. We believe that the digital revolution is happening now. When a revolution happens, what happens? it actually opens up the doors for business in a big, big, big way. So I'll take you 400 years back in time, when we were, traveling on bullock carts, and we were traveling on horses. And then we realized that our businesses, supposing you had a great artisan sitting out of Mysore, you had Mysore silk, okay? The artisan who was making a Mysore silk sari was only selling goods in Mysore. He was not expanding his business, even though he was making the best in the world product. Nobody knew about Mysore silk saris 400 years ago, possibly. Then, after railways and steam engine was invented and it came to India, there was a possibility that people traveled far and wide, and so a person sitting in Delhi got to know about Mysore silk saris. Otherwise, probably it was just in Dakshin Bharat that Mysore silk would have been very famous, with the horses and carriages moving around. But possibly a person sitting in Delhi or Chandigarh would not have known about Mysore silk saris. So railways made that business of Mysore silk expand in a big way, and that gave the business a lot of scale. So that was the first industrial revolution. I am only speaking about Mysore silk saris, but that happened to every small scale industry which was more localized. It then started becoming national in a certain way. Now, in the second revolution, which happened in the late 19th century and early 20th century, we discovered telephone, we discovered automobiles, and we discovered electricity. When we discovered electricity, there was a good chance that the handlooms, or any kind of manufacturing which was more handmade, started becoming more mechanized, started becoming more started becoming more machine made. And that was made possible because electricity was invented. Now, what happened when electricity was invented? It gave rise to a second industrial revolution, which means that a person who was manufacturing 100 saris in a month could now start manufacturing possibly 1,000 saris in a month, which means that his profits could possibly multiply 10 times in a month. And this actually increased the scale of the business. That's what the second revolution did. Now, what happened when the third revolution happened? The third revolution was the IT revolution. Internet and computers were introduced in the late 20th century and the early 21st century, and they became cheaper and cheaper. So a person who was sitting in Mysore was now to the entire world because geographies were in a way cut down. When geographies were cut down, Amazon became the marketplace, the internet became the marketplace, and so the small artisan who was sitting either in Chandigarh or in Mysore or in Kolkata or in Maharashtra or in Channapatna could actually sell his product across the world. So now the demand for his business probably grew from 1x to 10x in the second revolution to 100x in the third revolution. We now believe that the next revolution is around the corner. The next revolution is the digital revolution. Now, what are the drivers of these digital revolution? There are many drivers that are going to be driving this digital revolution. The first one is a blockchain technology. Now, what happens in a blockchain technology? All your businesses and all your accounts across the world, in a way, get networked. So, when you have to make your balance sheet or your trial balance and your profit and loss statement and everything, for every business, you have to start integrating, and then everything is known to you, probably once in a year. A blockchain technology will integrate all the businesses across the world, and every data that you need for any business will be available to you real time. The next driver of digital revolution is going to be genome sequencing, which I already spoke to you about. The third revolution is going to be robotics, robotics and artificial. I'm talking twofold. One is a lot of get automated. So until now, the manufacturing was happening, help of electricity with machines, but with human intervention. There is a good chance that in the future, you will just have to key in the code to manufacture a certain, sari or a certain toy or a certain product. And all that you have to do is input all the ingredients, and you will have the final product packaged and ready to be sold in the market without any human intervention. In medical technology, you are already seeing that happen. You can see robotic surgery. Today, when you're seeing a surgeon, he is very to do the robot which is doing that keyhole surgery. He is only supervising the entire thing. You will see a lot more progress over there. Then comes the case of semiconductors, which I've already spoken to you, and electric vehicles. So imagine, if the entire all the governments in the world pass this resolution that in the next 30 years we will only have electric vehicles. What will happen to the electric vehicle industry, and how much profits they are going to make? Every imagine the number of in India, that how much profits these electric vehicle companies are going to be making. And it's not very revolution. And of course, the last thing was the meta world, which I spoke to you, that we are going to be sitting in front of each other. We can be sitting, in the US, giving a conference to people sitting in US without actually being present there. So that again is one of the drivers which is going to be driving the digital. Why is all this important for you? It is important because if a company is going to be making profit, and you know well in advance that it is going to be making profit, you might as well catch it young. Peter Lynch says that, look around yourself. If your brand has a lot of business, if you are seeing that more and more people are buying a certain kind of shoes, if you are seeing that more and more people are driving a certain brand of car, then that company, that brand is making a lot of profits. If you buy the share of that company, you will be a part owner of those profits. If you are having too many medicines, it is better to buy the share of that company which is manufacturing the medicine. If you are taking, advice in Apollo hospitals, it is better to buy the share of Apollo hospitals, because whatever you have contributed to Apollo hospitals as a consultation is then going to be profits for that company, and it will come back to you in the form of shares. That is how Peter Lynch, describes investments. Taking a leaf from how he describes investments, since you know that a lot of people are going to be using robotics, a lot of people are going to be using cloud storage, a lot of people are going to be using, semiconductors and electric vehicles and the virtual world, then it is better for us to keep our eyes and ears open to this kind of a revolution. And the bus that we have missed, when we keep saying, I wish I had bought Apple, I wish I had bought Infosys, I wish I had bought Wipro, is probably standing at your door today. You don't know which are the companies which are going to make it big in the next 30 years, but you definitely know that these are the kind of companies that are going to be making it big in the next 30 years. And hence, it is important that you also start looking at investments in this space. So that's the thing in it for you. Um, the pace of innovation is very fast. Your steam engine took 200 years. Your electricity took another 200 years or 100 years. Your internet and computers took about 50, 60 years. In fact, the first things that were actually propagated were in 1970. And from there, it's almost 50 years that the computer became famous. But going forward, it's not really going to take too much time. It'll probably take 4 years or 5 years for you to see this complete change. In fact, the biggest driver of this change is going to be the 5G technology. And some of you may be aware that a lot of your set-top boxes or your OTT boxes are already getting upgraded to 5G technology. So with 5G, it's going to be really fast, and it's not going to be 200 years or 100 years or 50 years for you to see this change. It's probably going to be in the next 4 or 5 years. That's the pace at which innovation is make this difference. Now, you may say that, okay, great, Ashu, you've given me a good story. So let me do a thing. I will buy the top 20 companies, or I will buy the NASDAQ index, and I will sit and I will make my money. Great. No worries about that. One thing to note is that, the top 20 disruptors in any sector, the leadership changes every 10 years. Here is a snapshot of top 20 companies in 1990. I don't know how many of you would remember, but we started off with mobile phones with Motorola. We really don't. It completely lost its leadership in the last 30 years. We all know about Sony and Toshiba, very interesting brands from Japan. Today, they are nowhere in the top 20. We all know about Mitsubishi and Kyocera and Panasonic. Again, they are not in the top 20. So the companies which are disrupting and are leaders in the disruption are changing every 10 years. Today, after 40 years, Intel is the only company which is still there in the top 20. Microsoft has been there for some time, but the kind of companies that are there today are very different. You have MasterCard, you have Facebook, you have Netflix, you have PayPal, you have Salesforce, you have Taiwan Semiconductors, so on and so forth. Now we don't know whether the next leadership is going to be these 20 companies only. It could be a completely new set of companies. Hence, it is also important to understand and be invested in a larger set of companies, because there can be re-rating, and at the same time there can be mortality also. uh, there are for every Amazon, there are many Amazons that have failed. For every Apple, we know that there is Motorola and Nokia, which has failed. So it's important to be diversified in this set of companies that we are investing in. So I'll just give you a snapshot of where we are investing. We are going to be investing across all themes which have technology and innovation. We will look at semiconductors, we will look at software, we will look at internet and interactive media, biotechnology, healthcare, e-commerce, fintech, and mobility, and various other small sectors that are not represented in just one fund. We will be having a fine balance between large cap, mid cap, and small cap. We will be having a good balance between passive and active. These are the 6 funds. We want to go through the fund of fund route because The ideas are very different. The style of investing is very different. The spectrum is very broad based, and one fund does not capture everything. So we already have Nasdaq 100 available to all of us, but that does not capture everything. So we said we will look at 6 funds that captures all the 8 or 9 themes that I have spoken to you so far. And these 6 funds are Morgan Stanley US Inside Fund. Just 1 second, please. We have the ARK Disruptive Innovation Fund. We have Blue Box Global Technology Fund, BlackRock World Technology Fund, NASDAQ 100, and the Semiconductor ETF. These are the 6 funds. Now, RBI has set a certain limit for active investing outside India. That limit has got exhausted at this point of time. It is under review and will definitely be increased. In the meanwhile, what we will do is we will invest in the NASDAQ 100 and iShares Semiconductor ETF 50-50% each. And once we get the limits from RBI on the active investment space, we will have this bifurcation of 15, 15, 20, 20, 15, 15% each in these 6 funds. What I would like to also highlight to you is that because this is a new age segment, it can be very volatile. And we need to befriend volatility. We need to make volatility our friend. We are lucky that this is a volatile segment, and whenever the prices fall, they fall really sharp, and they give us an opportunity to buy many units. So for example, in the last 1 month, you have seen NASDAQ really correct. It's corrected about 15-17%, and it's giving you an opportunity to buy more units. So hence we are suggesting that you look at this fund through an SIP mode, an SIP which is very, very long term, maybe 10-15 years. Evidence says that an SIP in this kind of fund since January 2002 would have given you a 19% CAGR return. We are hoping that an SIP also helps you accumulate more units going forward as well. So we would like to suggest that because this theme could be volatile, you need to invest in SIP. While you can't stay out of this theme, because you will be missing out on all the new disruptive ideas. We don't want you to get anxious because the segment is volatile. Hence, we are suggesting an SIP in this fund. The NFO is open as of now. It is closing on Monday, but it will reopen again on 5 days later, on 12th of February. And it will be open for ongoing subscriptions from then onwards, like an open-ended fund. With that, I'd like to end my presentation. I hope I made justice to trying to simplify how this segment looks, and I hope that I have got some interest from you in this segment. I'm sure most of you are also aware of how businesses are changing, how life is changing, how work is changing, how communication is changing, and most of you would have interest in buying these kind of companies but didn't have access to it. Today you have access to it through DSP BlackRock Global Innovation Fund of Funds, and please do connect with Mr. Sharan, and he will guide you as to how you can have allocation in this product according to your personal asset allocation needs. What is the percentage allocation that is required in this kind of a fund according to your risk appetite? Mr. Sharan will guide you on that. With that, over to you, Mr. Sharan. Thank you.
Thank you, Ashu. Really, really wonderful presentation, and the product itself is very, very innovative. I request all my, today's participants, almost nearly
Sorry,
60,
I just missed.
yeah, 63, 64 participants are there. Thank you very much for wonderful presentation, Ashu. So, yeah, and I request, participants to, you have any sort of questions or any sort of you have anything to share with today's presenter, you can do that. What you can do is you can type your questions in the chat box or in Q&A. So I think Ashu is going to be here for some time and she's ready to answer also. And second one is, it's my personal, suggestion to all my investors is, normally we all invested in multi-cap, we have invested in a balanced advantage fund. We also invested in large cap and all. But one allocation I always suggested in every portfolio is global or international investment. I think this is a wonderful product to take that as a part of our portfolio. It's going to be a wonderful diversification. And it's also very good, many of the families, you always want to start an investment in youngsters name. So always you want to bring them for as an investment, right? Anyway, they're going to be a natural spender. But what you can do is they're always, very much thrilled with all the new technology, new innovations and all. I think this is a wonderful product for the youngsters, especially probably they can continue investment for next 10, 15 years. SIP mode is a wonderful way to invest in this fund. So I think, even what we can do is we can always start at a minor name. Maybe minor name probably when you start invest, because it's a fund of fund, and later, they can continue investing. But with many stories we hear that, if you invested in 1981 in Wipro, today they are worth of this much. We always talk about Nippon Growth Fund. If you would have invested in 1995, there would have been growth so much. I think I'm finding that type of growth potential in this particular fund. And, I think we all can be really get a benefit maximum out of this. Okay, any questions are there, Usha, where you can take it?
Yes, sir. I do see a couple of questions here. Ashu, good to go? Right.
Yes.
So the first question, yes.
Yes,
Yeah,
yes.
the first question is coming from, no, he's not mentioned his name. He's chose to be anonymous. By the way, the question is like, how is the investment in DSP safe enough when, because, we've seen examples like Access Global FOF not performing that very well. So he just wants to know, I guess, such concerns are, you would have come across such concerns quite often. So would you like to address that?
Sure. So, yeah, I will not comment about, another fund. I can only talk about my fund, and I can talk about investment in this space. Like I mentioned, investment in technology and innovation can be very volatile. And so, if you're looking at it only from a 1 year, 2 year perspective, you can possibly see huge drawdowns. Now, if Nifty corrects, say, 25 to 30% intra-year, there is a good chance that this fund can correct 40 to 45% also. And so that is to be used to our advantage. Two ways in which, I'm not saying, we are safeguarding the fund. Of course, everything is subject to market risk, like the standard disclaimer says. But what we can do is we can understand risk and reduce risk to some extent. One way of reducing risk, like I already mentioned to you, is to do SIPs only in this kind of a product. The second thing that we have done is that our thought process in choosing the fund managers has been very robust. We have not gone by just one fund manager underlying fund in the fund of funds. We have gone with 6 fund of funds, and all these 6 fund of funds have very diverse and a huge experience among themselves. Now take the case of Morgan Stanley. That fund is about 17 years old. It's seen various cycles in this space. BlackRock World Technology Fund is again more than 1.5 decades old. If you take the case of ARK, the analysts in that firm are not just financial experts, but they are scientists as well, who can understand the field of genome editing, who can understand the field of space exploration. They can understand various businesses that they are investing in from a product point of view, from a service point of view. Again, take the case of Blue Box Technology Fund. The fund manager over there is an ex-BlackRock person. The CIO there is the ex-BlackRock person with almost 15 years of experience, 15 plus years of experience. And again, if you're looking at NASDAQ 100 and the semiconductor space, we are not looking at one or two stocks in the semiconductor space. So we are not just looking at NVIDIA or Taiwan semiconductor devices. We are looking at the entire value chain of semiconductors. So we are looking at right from design to distribution of the product, and it is across 30 stocks. The fund is extremely over diversified. In fact, this is the only fund in the industry that you will see with 200 plus stocks. Normally, fund managers choose to have 50 or 60 stocks in their portfolio because the mortality rate over here could be high, because the volatility or the intra-year movement can be really steep. Like you saw Facebook correcting 25% in one day. These kind of things can happen. Now, having a 10% exposure to Facebook can really pull down your portfolio. But in this fund, you won't have more than 2% exposure to a stock like Facebook, or except Microsoft, which is 3.5% across all portfolios put together. There is no stock which is more than 2%. Hardly 20 stocks would be more than 2%. The rest would all be 1% and below. If you take the top 10 stocks of NASDAQ alone, the weightage would be 52%. But if you take the top 10 stocks of this fund, the weightage is just 18%. So three things that you can do to reduce the risk in your investment. One, do SIPs. Two, we have well researched the fund managers and had complementary ideas between all the 6 investment styles of the fund managers. And three, to make sure that the volatility is lower, the stock-wise exposure would be far low. We have over diversification of 200 plus stocks in the fund. So that is what we have done to reduce the risk from an investor point of view. I hope I answered that question.
Thank you, Ashu. Yes, the next one is by Anand L. N. He says, how are capital gains taxed for these global funds?
Yeah, so capital gains are, this is fixed income taxation. So just like, your short-term fund or your liquid fund is taxed, the same taxation applies to a fund of fund as well.
Okay, I guess as of now, those were the questions we had. Probably we will be able to take more of them, maybe offline. Yes, or if there is any of the attendees who would like to post in their questions, yes, I do get another one. Yeah. The person is asking SIP minimum investment amount.
You can start with 500 rupees, but it will not make a difference to your portfolio if you start with 500 rupees. So ideally, you must look at 10 to 15% allocation, but I would still suggest that you be in touch with the Inspiron team, and they will guide you on what is the optimal allocation. Because if you're doing a 500 rupee SIP, it may not make justice to your portfolio. There is no point in seeing a high return on a small investment. It is always important to have an optimal investment to see an optimal result on the overall portfolio. So while 500 rupees is the minimum SIP amount, you can look at 10 to 15% from an overall allocation point of view, subject to approval from Mr. Sharan and team. Um, yes, if you don't have that kind of money to start with, then you can think about a step up SIP or a top up SIP, where you can give a 10% increase in SIP for every year, subject to a maximum limit. So you can start with 500 and say, I will increase by 500 every year, or I will increase by 1000 every year. And then it will help you collect more units. Because if you don't have a meaningful investment, then it does not make sense to have an investment.
Right. He's also asking what could be the starting investment amount for lump sum?
Lump sum, again, the same like any other equity fund. 5,000 rupees.
All right. Yeah, we have Mr. Sridhar Sogi asking, how about pharma industry, which you have talked about? After COVID, this is a booming industry which we can invest in.
Yeah. So my views on pharma are very strong. A lot of people may differ in my thought process. I don't look at pharma only from a investing point of view, from this point of from just the current point of view. I look at pharma in two different ways. The first way I look at it is, if we are a family of four people, basically investing in pharma and healthcare helps you hedge against the pharma or healthcare inflation. I'll tell you how. If you are a family of four people, between four people, if you are spending about 10,000 rupees per month on medication, which means approximately 1 lakh rupees. If you are, say 45 years, you will retire in the next 15 years. The cost of this 1 lakh rupee medication is going to be at least 5 lakh rupees per annum. And none of this is covered by medical insurance. To have that 5 lakh rupee expenses year on year, you don't want to dig into your retirement corpus. So I would suggest that while you take your medical insurance on one side, you also start an SIP in a healthcare fund. That healthcare fund SIP should be kept aside only and only for your family's medical expenses after your retirement, things that are not covered by the medical insurance. So if you talk about insulin or your aspirins or your any regular medication, that is not provided by your medical insurance. Your dental expenses or small day surgeries are not prescribed by your medical insurance company. So a healthcare fund actually helps you contain the inflation, because the profits are coming back to you. So it helps you contain the inflation of your medical expenses. So look at healthcare from your healthcare fund point of view, not from just an investment point of view.
All right. We have another very technically oriented question. It says, how is this fund different from DSP US FlexiCap Fund and Innovation Fund of Fund? Does it invest in global market or only in US ETF funds?
Yeah, that's a very interesting question, and a very good one as well. So DSP US Flexible Equity Fund invests in everything. It invests in the traditional businesses across US as well, and it invests in technology also. The technology weight in the US Flexible Fund would range between 15 to 20%, whereas this fund is 100% technology fund. So if you actually add US Flexible Equity Fund and Global Innovation Fund of Funds, you are actually getting the traditional business as well as the non-traditional business in the world. This fund, while it says Global Innovation Fund of Fund, most of the companies are listed in US, but actually it does not matter because the revenues of all these companies come from across the world. So, for example, Apple is listed in US, but the revenues of Apple comes from across the world. Everybody from Indonesia to Japan to US to Europe to Latin America to India to Asia, everybody in Asia, we use our iPhones. So it doesn't matter that Apple is listed in US. By virtue of being listed in the US, 80% of the geographical diversification is US, whereas 20% is maybe across the world, like Latin America or Taiwan or China or wherever, Europe or UK. But it really doesn't matter today with technology. Your geographical barriers have actually come down. You have actually erased the borders, especially in investment and in doing business. You have political borders, of course, but it really doesn't matter from a jurisdiction point of view. Amazon sells its product across the world, so it doesn't really matter, where it is listed. Of course, you will be invested in dollars, so that's the only currency that will be there in terms of this fund.
With that, I guess we've come to the end of the Q&A session.
There is just one question, Usha, over here on the NAV. Since it's a new fund, the NAV will be 10 rupees.
Yeah, that is something I wanted to take offline, and I would like to reach out to the person and try to make him understand more, because, probably he didn't know the NFO concept as such. So that's the reason I did not interrupt you with that.
Sure, sure.
All right. If no more questions, we would like to wind up this session. Yes, I guess nothing else coming up. So Ashu, it's off to you. Yeah. Thank you. Thank you. That was wonderful. We would like to get in touch with our investors later on. And thank you very much once again.
Thank you so much.
Yeah. Bye-bye.
Bye.